All right, folks, here we are on the Trading Nut YouTube channel. We've got Ant_FX on the show. So Ant is an ICT student who's also been on the Trading Nut podcast, episode 44. We've just finished a podcast with Ant, and he's talked us through the whole journey, how he found ICT, the fact that he's now just gone insane with his trading, and we're going to see some of the stuff that he knows that he hasn't necessarily learned from ICT, I think, because he's under NDA, but we're still going to get a good look at how he sees a price chart, and I might sort of reveal a few things for you anyway. So, and welcome to the Trading Nut YouTube channel. Over to you.
Lovely. Thank you for having me. Before we start, obviously, I am under an NDA. This I'm going to be showing today is actually part of Michael's free material. So if you think that this is something that could be particularly useful to you, go ahead and, if you was to go to my social media, I often promote his pages. So if you want a really good mentor to learn from, this is definitely one that I would suggest you learn from. With that said, I just want to preface it that obviously this isn't my material. I learned this all from Michael. I wouldn't have been able to have seen this in price if it wasn't for him. So I just want to quickly say thank you to Michael. So what we're going to be talking about today is a concept known as Power of Three. Now, I've learned a lot of really cool concepts from Michael, but this is one of the ones that sticks out to me the most because of how powerful it is and how it's basically hidden in plain sight. So this is basically called the Power of Three. Now, what we have here is we have a bar chart. So what this is representing is a daily range. So, for example, if we take this candle here, for example, we have a green candle, which is an up day. So we have the open, then we have the down movement, which is the low, then we have the up movement, which is the high, and then we have the close. Now, one of the best ways to view this, I'm scrolling a little bit, is if we was to go to a line chart, so candles, bar chart, sorry, not line chart, you can see that this is basically the same thing, but it's depicting a daily range. Now, there's a lot of people think that in the markets it's supply and demand, it's trend lines, it's buying and selling pressure. In the ICT camp, we know that this is all nonsense, in our opinion. So this is obviously depicting the open, the low, the high, and the close. So this is basically what a daily range looks like. So a day's trading from 0 GMT to 0 GMT the following day, that is a day's worth of trading, a 24-hour trading period. So you're probably wondering why this is useful to your trading. So I went and picked out an example. Now, there are many trading templates that the market uses, and this is just the easiest one to explain to new traders to look for. So what we're going to do is we're going to then drop down into a lower time frame to get a better depiction as to what this looks like. So I went and picked out a cherry example. Now you can go and back test this in your own time and just see if there's any merit to it. I'm not trying to twist your arm, etc. Zoom out here. So I picked out this day here, which is a beautiful, beautiful setup. So you might be able to see the consistency with the trading day. So what I've done is I've depicted two lines. This is another ICT concept that I'm not going to teach, but obviously if you want to pursue that, you can go to Michael and learn from him. So this is called true day, and this is basically the time aspect that the algorithm that we trade off of runs. So it runs from 5 o'clock. This should technically be here. It's just I'm using daylight savings time. So it's from 5 to 8 p.m. This is how the algorithm runs. For daylight savings time, obviously for me, it's 4 GMT to 1900. So this is basically how we are depicting the daily range. So in here you can see, I'll just use that you have the opening candle here. You have the down movement, which takes out some lows, and then we have the continuation up, which creates a green candle on the daily chart. Now, what's going on here is basically there's three phases to the marketplace. It's accumulation, manipulation, and distribution. So what the banks have done here is they've basically used from this opening price, the movement down is the manipulation that takes place. What's going on here is it's basically purging liquidity, which is another term that you'll learn about if you go to follow Michael's work. This is basically purging liquidity because basically people that were long in here and long in here, long in here, this is an area, an old low that we learn in retail is a good place to put your stop. So what happens is that liquidity pulls around this area. So what they're trying to do is they're trying to accumulate longs. The best way that they can do that is to purge buy stops. So there's going to be buy stops resting below this old low. Once the liquidity is purged, so this is in this movement here, this is manipulation. So they're manipulating price to offset the people that are already long from down here to accumulate their stops. What happens is that when this happens, their market orders are basically being used up because they're going long in here. They're trying to offset those positions that are long from this point. You might also notice that you have an Asian range in here. There's a lot of retail stuff that preaches about the breakout strategies. So you use the Asian range. What's going to happen is oftentimes what you'll find is that they'll take it one direction, for example, this direction down, and it's gone behold this. So it's gone just a little bit above the higher. We'll pretend that it was equal. We'll be fair and just say it was equal, and you didn't take a breakout position from here. But you can notice that they've flooded the market with orders and people have gone short from this point. When you're thinking about where the stops will be resting, from the example that I gave over here, you can see that we have some equal highs over here. We have an equal high over here. That is going to be liquidity that they're going to purge because they're now long from this position down here. So you can see that they'll get those on the wrong side of the marketplace and then accumulate. So what we're having is manipulation, then you've got accumulation, and then you've got the distribution part of the range, and then it just comes off the high. So that's going to be that little wick that we see on the daily chart. So that's basically the concept known as Power of Three. Do you have any questions at all, Cam?
No, look, that looks fantastic. So, I mean, if somebody was looking for an entry on here, where would they be thinking about entering?
So the entry point, sorry, I'm going to use my box. The entry point really is here. So now I'm going to stay on a lower time frame. There are going to be things that Michael teaches that are on a higher time frame, say hourly, 4 hour. Even price levels that are very sensitive on a daily chart, the open, high, low and close, those are going to be very sensitive areas. So what they're doing is they're offsetting these positions here and accumulating these positions here. This is your perfect buy entry. Now, another way to use this is by looking below the Asian range. So here we're just going to highlight off the Asian range, high and low. You can see that there's going to be stops resting above and below. Obviously, you're looking at this drop down as the manipulation for accumulation of longs. So you want to be copying, or at least not copying, but mimicking what the banks are doing. So it's going to offset, and then they're going to accumulate down here. This is an ideal entry for a day trade. Then all you have to do is basically sit on your hands and let the daily range do its thing and expand higher. And that is basically how we do it in the ICT camp in terms of a day trade. So obviously there's certain sessions that you'll learn about where, the London session and New York session have the highest time periods of volatility, which obviously help with your trades. So you can see that the volatility expansion comes in at this here. So this, for example, you can see that I'm not very proficient with this yet. Was the MT4 newbie. You can see that based on time, this is our London kill zone. You can see that based on the right axis, which is your price, and your left axis, the bottom axis, which is the time, this is going to be your ideal entry. in here for an accumulation of longs. So essentially you can go from the Asian range low, below this old low, because they're going to obviously accumulate these longs, anywhere in this area using, say, a 30 pip stop loss. If you're learning and you're very new to ICT, use a 50 pip stop. It just gives that wiggle room for like error, just so you can sort of get the gist of like what it is you're learning. But you can now see, based on price and time all coupling together and power of 3, that as a day trader, you already have an edge because you know where price is going to go to. I'm just going to end with one more thing, which is an old adage that gets thrown about and largely ignored, which is buy low and sell high. You hear it so much, yet nobody does it. You can see that this is obviously a classic example of doing this, buying low and then getting out at a higher price. But you're buying as price is going down. Think about psychologically the traders that are basically watching price fall down. Do you think that retail are buying this up? The answer is
no.
Because what they're doing is they're selling this. They're thinking that this is going all the way down here. Like they're chasing price. But we know that based on the manipulation phase of the daily range and the accumulation phase, that this is obviously an opportune moment to buy at a lower price. And that's pretty much it. So if you think about like a general markets, in the sense that if you had a car, would you like to sell your car at a high price or a low price?
Yeah, exactly. At a higher price.
Yeah, you'd want to sell your car at a higher price. What if you wanted to buy a car? You'd want to buy it at a lower price. Now, price in terms of a commodity such as Forex, like the pound, so you're buying the pound, it's still a commodity at the end of the day. But what you're doing is that you're buying it at a really good price, the same way you would buy a car. So this is kind of like how a daily range is depicted. Now, this that I've shown you as an example, go through and pick out in hindsight how many times this unfolds. It isn't an everyday thing. That's what a lot of people think, that this is basically how the markets run. There are other templates that will unfold in price that are going to be a little bit more tricky for the average newbie. But the more experience you gain, the more you see things happening, the more you get used to it, etc. So you won't fall victim to those. But when you're starting out, you're going to make silly mistakes. So just basically try and see where this works out and why it works out. And you'll see that largely, like a lot of the time, that this is kind of what a daily range is depicting.
Cool. Well, look, that's absolutely brilliant stuff. I think the guys are going to be able to sink their teeth into this. So, Ant, before we wrap up, what's the best way for the guys to get hold of you?
So the best way to get a hold of me is through Telegram. So that's at ant_fx. I'm also on YouTube, which is youtube.com/antsyt. I'm on Instagram at ant_fx, and I'm on Twitter at ant_fx_. Just before I go, Ken, I just want to preface it that obviously what I've shown today isn't mine. You can go learn it for free from my mentor. I just want to quickly say, like, just a big shout out to Michael for everything that he's taught me, because without him, I don't know where I'd be. So
cool, brilliant. And look, guys, if you do want to find out a bit more about Ant's journey and how he got on with the ICT and how he progressed, you can head over to the tradingnut.com podcast. So there should be a link underneath this video. Also, subscribe to the YouTube channel, hit the little notifications bell, click all to get more videos like this, and we'll see you on the next one.